I think the real key is we're trying to just get our hands around this, but you're not making it easy for us. But you're straightening us out. You're second person today. You're saying it's not a canary in the coal mine, but it's not an isolated incident. So it's somewhere in between. What is that in between place?
Yeah, hedging my bets. No, I mean, I think, look, we're expecting to see some losses around office portfolios, especially in some of these larger metro markets where we saw population flows move out of these cities down to other markets, largely the Southeast. And so I think we've been expecting to see some weakness, and frankly, had been surprised we hadn't seen more of it to date. We just got through bank earnings season and hadn't seen much around credit at all until, these last couple of banks reporting the week hereafter. So, I mean, I think that there are clearly some issues. There's some losses to be taken, but we always have to take it within the context of how much capital, how much in reserves that most of these banks have. And even when you look at New York Community, a lot of these, issues around forward earnings and the stock decline had to do with liquidity build and other, necessary capital build from crossing through 100 billion in assets. So as
Okay.
much of a regulatory issue as it was really a credit issue in and of itself.
All right. So there's a lot of nuance here. One thing I do want to talk to you about is the issue here when it comes to New York Community Bank with multifamily housing. So in general, we have a lot of people come on, they talk about real assets, and they say that multifamily housing is actually strong. Why is New York Community Bank having such a big issue with this? We know what's going on with the real estate when it comes to offices. There's just more work from home. But why are they having issues when it comes to multifamily?
Yeah, I mean, that probably is more of a one-off sort of incident, in my opinion. I mean, it's the New York market, and there's some rent control issues that are always at play there. So there's a little bit more specificity to that issue, I think, than the office concerns. I mean, the Azora Bank, largely office, largely again those metro markets. So I think the multifamily across most of the rest of the country, to your point, is still holding in very strong. We've heard of some weakness maybe in Houston on a one-off too,
Okay.
but by and large, that's holding in very well.
And by the way, we're looking at New York Community Bank. Shares are rebounding this morning, but again, down for the week about 40%. You've come on before and you've told us that at times these stocks, they trade on sentiment. So this issue with New York Community Bank, what do you think this means for sentiment going forward? Because as you're saying, not quite a canary in the coal mine, but it's also not an isolated incident.
Yeah. No, I think it's really difficult in the near term for the sentiment around banks because look, you can extrapolate these losses to your heart's content. If you want to say, okay, Azora took its LTVs up 60% on its office loans. I want to extrapolate that across every bank in the country. You can take a very negative view on the group. And so I think it's going to be very difficult to get generalist investors to step in front of a lot of these names until we get more clarity that, okay, yes, this is going to hold in within where banks are reserved. We are going to have this softer landing. So again, everything comes down to the Fed when it's bank related. And so we really do need to see clarity on the path for rates, get people confidence around this soft landing. And quite frankly, we have to work through some of these losses. Seeing these losses materialize in a way is a good thing because it allows us to say we've had a cycle, we're past the cycle. Now we can buy these banks confidently.